Offline data and calculated variables from a multitude of sources are proven to be predictive and effective in ad targeting. We've already learned a lot about that during the day. Bisnode aims to help the media industry to build competitive ad targeting. So now I'm very happy to introduce Edoardo Jacucci. He's the CPO, the Chief Product Officer at Bisnode in Norway. Enjoy.
Good afternoon. It's a pleasure for me to be here. I'm the Chief Product Officer at Bisnode. Bisnode, as we will see in a second, is one of the main players in Europe when it comes to data for marketing and risk and credit. And it's a particular pleasure for me to speak here because before joining Bisnode in August last year, I spent more than 3 years in Schibsted Media Group, which some of you might know, where I was responsible for, when I joined in 2013, for defining their data analytics strategy going forward. And Bisnode back then acted as a holding company of very independent companies and news and online classified companies around the world. And since then, we started a very radical transformation, which is still ongoing, but we are starting to see the effects of it. So I was responsible there for part of this transformation, particularly the data analytics part. And what is relevant there for the discussion is that I know something about media, so I can definitely relate. And I feel passionate about making sure that media companies stay independent. And to stay independent in this turmoil in the industry that we are seeing, and every change is an opportunity, but in this turmoil we need to stay independent by making sure that media companies can have distinctive offering in the various sources of revenue. So if it is advertising, subscriptions, etc. So to stay competitive, one of the key of the future is having the right data to provide distinctive services, be it targeted advertising, be it recommendations, be it better offering for acquisition of new customers. So that is the context of my pleasure of being here in this conference. I joined Bisnode 6 months ago. And Bisnode it's one of the leading companies in data analytics. So let's look at a couple of data points. It's relatively large. It's 18 countries, several customers. The two traditional lines of business are marketing, so data used for marketing services, helping our customers to reach or reduce churn for their customers, be it the consumers or businesses. And the other area is risk and credit, for which we have a partnership with Dun & Bradstreet, which some of you also may know. But today we're going to talk about marketing and consumer marketing. And in Bisnode, when it comes to marketing, there are basically 3 things we do. First is we help our customers to manage their contacts. So if you're a media company, you have subscribers, you have a database, you want to make sure that you have the data up to date about how to reach them. But also, we provide several variables that we will see so that you can learn more about your customers and your subscribers. The second point is we also help our customers to follow the life cycle of their customers. So in this case, we'll be subscribers to media by providing acquisitions, optimization, churn, analytics. And what is more relevant for the discussion today, with all the data and variables that we build, we also help with targeting across multiple channels. And Bisnode is basically in the business of collecting data from all the available data sources, be it for consumers or businesses. So we systematically scan the market and follow the latest development on what data is made available and how we buy it or we just get it. And we go through the very painful and long process of cleaning it, normalizing it, aggregating it in a way that it can be consumed. This is one way we add value, because then when we come to companies like media companies or other companies, the data is available for consumption. But that is only the first step. The second step, which is what I would like to discuss with you today, is all the other variables that we add on top of it. So we apply statistical models to extend the discrete data set, which is describing consumers, with all sorts of variables modeling statistically the preferences and the profile of these consumers. And examples of these variables can be discrete variables descriptive variables like gender and age. This, of course, we get as a fact. But then we add variables around household life, geography, and some can be descriptive like income, but other can be purchasing power. So this is an estimation. Household variables, phase of life. This is not something which is explicitly stated, so we model it. And you can picture between over 50 and between 50 and 100 variables in the countries where we have this offering in several dimensions. Just to give you a sense of the depth where we go, is we model the household purchasing power, so not only in the individual, but we try to put it in the context of the household. We have a lot of variables around cars. Sometimes is descriptive, so it's actual fact. Sometimes, more often, is statistically calculated. Whether you have a new car or a second car, how old your car is, how likely the consumer is likely to buy a new car, and then we calculate all sorts of other specific variables, like the purchasing window for home insurance. So once you start with a core of data and you add statistical information also from the central statistic department in that country, you can start creating all sorts of variables, enriching the description of a user. And the whole point that I would like to make today is all of this data is offline. And as soon as I joined, is actually one of the reasons I joined Bisnode from Schibsted, is because I was passionate about data, but also I saw the incredible value, untapped value from offline data. And what happens when you bring this offline data online? When you combine it with the data online of, say, a media company, or just bringing it online, what kind of effect you get? And this is what I would like to tell you a little bit today, and also walk through a couple of examples of the latest variables we have developed, which I think are pretty interesting in terms of describing user behavior. So if I had to prove the point of the value of offline data, I would use this example. And this example is about us running a campaign on Facebook ad for a media company, and achieving a click-through rate of the Facebook ad, which was created with custom audience. So it's a ad service that Facebook provides. We achieved a click-through rate above 5%, which is more than the average of what Facebook ad has in terms of CTR. You can check the statistics and the benchmarks. And this result was achieved by enriching the targeting that we did on Facebook with the intelligence from the offline data. So we pre-qualified and we tested and we pre-qualified target groups based on a much richer set of variables than Facebook can offer, so that we could be really, really targeted, much more targeted than we would be able to be in average if we just use Facebook ads campaign with the profiling they provide. And this was so successful that Facebook called us, and because they saw the spike in the click-through rate in this campaign, and they wanted to learn, what are you doing different? And what is different is that indeed we were using offline data to enrich and make the advertising much more targeted. So this is to make the point. But now the journey that I would like to go with you is through two variables that we created that I find extremely interesting when I'm thinking about media and what we can do with that. And the first is actually two variables. We call it the cultural and economic capital. And the way we build these variables, and the cultural capital describes low culture, high culture, whether you have high degree or low degree, if you read or you never read, is based a little bit on stereotypes, but actually works. And the economic capital is pretty straightforward, so it's the net worth. And what we do is that we use surveys. We use surveys like from Ipsos or TNS, and then we connect the surveys anonymously with the offline data that we have. And then combining these two, through these surveys, we get all the details about the behaviors of people, and then we are able to extend those through the predictive models that we build on our data to the entire population. So starting with a few dozen of thousands, so 15,000 surveys, for instance, in Norway, we're able to create the model and extend it to the whole population, and we are covering literally the entire population in Norway. And the way this works is that you're scored on high culture, low culture, high net worth, and low net worth. And the way to use this is to the extent that we're able to link a certain behavior to one of these squares, and so to show that on this 3x3 map, the behavior is polarized, this means that the model predicts, the model works. So let's see some examples. So if you are high in culture and high in net worth, you're much more likely to like hiking in the mountains for your holiday preference. If we look at a different type of holiday preference, like charter, this is usually a behavior that you find in a population which is low in culture and medium-high in net worth. So how do we translate this in something that we can use? If you know the customers, then you are able to use this model to then either tailor advertising or content specifically to certain part of this universe. So you're able to use offline data to actually target and pre-qualify what the interest of people would be. Let's see other examples. If you're really into health and well-being, you're likely being on the high culture, versus this is not very relevant statistically in the low culture segments. And if you want to target people which are really into cell phones and mobile and the latest technology, and you want to sell or advertise a phone, you can segment those part of the population which are on low culture, low net worth. Is generally interesting. So you see there are no red dots here, but there is definitely a spike in this quadrant. To see another example, we also mapped cars and what are the most popular cars in the different quadrants. So we saw that the Golf is more popular around high culture and high net worth, versus a Kia Soul is the other part of the quadrant. But we also analyzed more. I mean, the set of analysis we did is almost endless. So for instance, on the top left, people which are high worth and high culture, you also find the Audi. But an Audi which is 10 years old, you find down here. So this is a different group. It's a different use case. If you want to sell or advertise services, or you want to sell some advertising to Audi, then you are able to say, okay, let's just target those. But if it is about maintenance of car of an Audi, an old Audi, then you know that it would be down here. Other behavior, if you're likely to shop online auctions, you're usually on the low culture, versus high culture, they tend not to. And one which I find counterintuitive personally is you're more likely to do online shopping more than 1 hour if you're on low culture. So apparently, this is where I am. But also, we did correlations with profiles of people who subscribe. Aftenposten is a newspaper in Norway. And it's actually known, but this just shows that the model works. They're usually on high culture regardless of income. Whereas another publication, which is Dina Penger, which is about wealth and wealth management, I mean, not high net worth, but still, it's on the high net worth generally. So this was a variable that the cultural and economic capital that we developed recently, and we applied successfully in campaigns with our customers. That I wanted to share. But there is another one. This took some time to develop, but it's pretty good. But there's another one that we found really fascinating, which is around impulsiveness. So we wanted to score people, the population in a country, around impulsiveness. And that's a bit tricky because it's a softer type of variable. How do you say for a fact that you're impulsive? If you have to calculate the net worth, it's easier. It's a hard fact. But what is interesting is that research shows that there is a correlation between impulsiveness and people reaction to advertising. So the fact that you react to an advertisement or that you actually online are going to buy something, it's correlated with impulsiveness. So it's an interesting feature to have. And the way we went about it is the same process. So we collected thousands of surveys. Of course, we didn't just ask, are you impulsive? But it's a set of questions which help to profile the respondent. And then with the same approach, then we created predictive models to extend to the rest of the population. And we created a simplified score model between 3 and 5 scores. In this case is 3, high, medium, low impulsiveness. And then we tested. And so why is this interesting? Because there are several behaviors which are relevant, again, if we want to do targeted advertising or we want to serve content, which are relevant to understand whether the user in this case is more likely to have that behavior or not. So for instance, if you're looking for new experiences, for adrenaline or anyway, traveling, or if you're more likely to spend money on short-term rewards, like, let's go out and have fun, let's go out to a restaurant, versus things which can provide a reward on the longer term. If you do daily grocery shopping, if you shop by mail order, if you buy an installment plan, so for instance, this is relevant for all the companies and banks that want to provide consumer loans, or if you are the converse, you are subject to payment remarks. That is, you don't pay your telephone bills in time. So let's see how this correlates. And what we found is quite interesting, and that is we have a correlation between impulsiveness and this behavior to the point that if you're impulsive, you're 150% to 200% more likely to have these behaviors than somebody which is less impulsive, with a quite interesting spike on being subject to payment remarks. So here you see also, I mentioned that we do marketing, but we also do risk and credit, so we try to observe two sides. You're more likely, if you're impulsive, to buy an installment plan, but also much more likely to get payment remarks. All this information is just offline data applied that can be brought online. Now, when we look at this correlation, especially on the payment remarks, we see the correlation between impulsiveness and payment remarks. But then we can use the other two variables as well, and then we see that there is a very distinct profile of people which are subject to payment remarks, and is usually on low culture, especially low net worth. Again, this is important both for the credit scoring that we do, but also has proven very effective for the targeting, for advertisement and content. So what I hope is that I provided an insight into the value that lies in offline data and what happens when we bring this data online. And in the context of the conference today, it's in the purpose of helping media companies to be stronger. And we saw a few applications. We can improve Facebook ads click-through rate. We can help. This data can help on subscription leads and help to reduce churn. But also on content recommendation. So we talked about advertising, but all this profiling is relevant also for content. So if you imagine bringing this offline data and matching that also with behavior data that you usually collect, it's a pretty strong combination. And I can think, thinking back of my time in ships, that also a particular problem that you have that this would help solving, which is the cold start problem. So you have somebody who has just bought a subscription, and back then we did a churn analysis to understand what really drives the churn after the subscription, and we saw that it was a 3-month subscription, and it was a cliff, people just leaving. And so we were spending time trying to figure out how can we reduce this cliff, how can we engage the customers before we have evidence of what they really like. It's a classic cold start problem in recommendation. So that's a possible application. You get pre-qualified profile description based on the offline data, and this can help to do content recommendation, hence reducing churn after 3 months. But also unique targeted advertising. We saw the examples from Facebook. When I was in Schibsted, again, Facebook and Google, for the strategy we had, was the alternative we were trying to fight. And so we were trying to build something which can be competitive. And this shows that this goes in that direction. So it can help to build unique targeted advertising. And all of this also in a GDPR compliant way. I really thank you for your time. You can contact me at this email. Otherwise, really pleasure to be here. Thank you.
Any question from your part, please?
How do you do that?
You get a mic. You get a mic in a second.
Thank you for a very good presentation, Edoardo. How do you do the matching from offline to online? Is that the cookie, and how do you find the offline cookie?
Yeah. So if there are two cases. You know your customer because the customer is logged in and is subscribed. In that case, you feed this data into your online world. So when, assuming you have a profiling of the consumers, then you can enrich the profiling with this offline data. So you do the matching. If it is anonymous, it's trickier, but we have found out a way to do it in a way that is still privacy compliant. That is, of course, we cannot, and we should not, and we cannot identify the anonymous users. But if we have a data, and we did this with a DMP, so a data management platform provider, which does the profiling together with media companies. So they collect data about behavior data and also location. And then we are able, with the location, to come to an approximation, which is still privacy compliant, where we can do an approximate matching, which is still good enough. The post number, even better, because to be compliant, it needs to be not a smaller group than 5 or 10 people. So as long as we maintain this, the privacy, we don't identify the person, which is, we need to respect that the person is browsing anonymously, then we can do the matching, and then you get a pretty rich combination as well.
Can you identify the people by browsing, by their browser behavior, if they are the same ones browsing on whatever device? Do you mean what I mean? Even if they are anonymous, can you identify if this is the same guy or girl browsing here at the desktop, then having a smartphone, if it's not a subscriber?
Yeah. Yes, it is possible. It's not what we do. We do this in Bisnode in collaboration with other companies. But I can talk about my time in Schibsted, where we had this question ourselves. I was also responsible for defining the privacy strategy there. It was an important question. Do we do things like device fingerprinting or user fingerprinting, so that we identify and we can connect devices of the same user? It is possible, and there are companies like, I can mention one, which was recently acquired by Telenor. Anyway, there are companies doing that. Actually, I don't need to advertise anybody. But for a media company, I think it's an important question to have. Do I go down that route, or what at least we decided to do in Schibsted, which was we're going to try to get people to log in, as many people to log in as possible, and increase the rate of login, the share of logins, which was between 5% and 50%, depending on the website, to above 70%, which is the target I set. I think this is a longer, tougher, but safer route, and you get the benefit of having a direct connection with the user. And once you have the user and you have identified, then integrating offline data is even easier.
And a very last quick question. You talked about 15,000 surveys. How much is the percentage of people, if you want to get them into a survey and answer a question, online, offline, whatever, the percentage of people who really do it properly, that you can use data at the end?
Yeah, well, 15,000 is indeed the qualified surveys that we were able to use. But this specific question, how many surveys you have to do in order to have a good companies like Ipsos and TNS, from which we bought the surveys, can answer that.
Okay.
But it's something you can buy.
Okay, thank you very much.
Thank you.
Till here. Thank you.